So let's start drawing these zones on our charts. Now, before I do this, I just want to make it super clear that in this lesson, all we're literally going to be doing is looking at what makes, well, what we spoke about before, right? What makes the bare bones basic starting level of what is a supply and demand zone, and essentially how you can draw that on your chart. But what you will very, very, very quickly see is they are everywhere. Price can just ignore them and disrespect them a lot when price returns to it. And obviously in the following lessons, that's when I'm going to actually learn how to, filter out a ton of them so that we only concentrate on the ones in which we think will have the highest probability of actually, being respected and causing that move that we then want to trade from. Okay. So don't be disheartened if you start drawing these on and it just seems like an absolute mess, because it's supposed to be that way. But this is step one. And then we're going to add more and more filters to obviously reduce the noise. Okay. So just on the 4-hour chart here on Eurodollar, but you can literally just to any chart you want. It replies, the same principles all apply. So again, if I could keep things very, very simple for you, especially if you're new to supply and demand, what we are really kind of looking for and what your eyes will slowly start to be trained to see and will gravitate towards is we're looking for like, where do those sort of pivots and those shifts in price action occur? So like whenever I look at a chart and I'm starting to think about supply and demand, the areas I see is like those sharp sort of movements away, right? So you get a bit of a correction and then demand steps in, right? Bit of a pullback and then demand steps in. Bit of a pullback, demand steps in. Like we move up and then we shift down to the downside. So that's where supply has stepped in, right? So you see these like pause in the markets, because that's where, we were talking about how, let's say the market deems price action to be at fair value, right? When this, this time period is going on where price is just moving sideways. Everyone's pretty much in agreement that roughly price is fair around that level. But at some point, there's an overwhelming imbalance between supply and demand, right? And this is where supply clearly steps into the market to push price out of that range. Likewise, price is down here. All right, supply's in control. It's looking for that liquidity. It's looking for where is the demand in the market at what price level that can now contain price to stop price falling, to start to apply some upwards pressure to it. So then when that happens at this moment, right, buyers and sellers are in agreement for however many hours that is. They think, yeah, okay, roughly we agree price should be around. But then at some point, what happens? More demand than supply steps into the market. There's an overwhelming imbalance again, and then price pivots to the upside. Okay, it searches for that liquidity. It searches for where everyone who's buying in here, buying pressure until there's an equal amount of sellers to then stop price moving any higher, and then we're in fair value again. And then what happens? We get another shift to the downside where there's an overwhelming imbalance between supply and demand. Supply steps into the market. So that's kind of what I was saying. If you try and keep things simple, what we're trying to do here is we're trying to look for where are those shifts in price action, where is kind of momentum stepping into the market after there's been a pause or a consolidation, because in its most simple form, like here, that indicates to me that there's been an overwhelming imbalance where, if you keep it even more simple, let's just say, I like to say, because it's a much simplified way of viewing the market, but just saying big money stepped in here, right? Big money stepped in. So on the balance of probability, potentially when price revisits this level, there may be similar interest, right? There may be resting orders, whatever theory you like to use, that we may see, continued strength from here. But as I said at the start, right, this is where we're just drawing them on. We're not using all of the filters that we'll use. So a lot of the times you will see these disrespected. But hopefully you kind of get the general theme of what I'm looking for, right? I'm just looking for, where are those shifts in price action, right? Kind of those turning points, those pivots in price action. And generally that's where like the supply and demand is going to be. So again, this is going to be messy, but let's kind of just draw on things and you'll see what I mean. So we have price moving to the downside, right? We pull back and then we move to the downside. And then you see how we get that shift to the upside from here, right? So we have the sell before the buy, right? The sell to buy, okay? So if we take from, I'm just going to use a box here. So if you go over to the left, you can use a rectangle. That's what I use to draw supply and demand zones, okay? Now, if you draw it from the top of the range all the way down to the bottom of the range, okay? Now, if I just open this up, the settings, I use gray for the 4-hour chart, and the key, it's on style. The background, the key with your supply and demand zones is you want the opacity to literally be as close to zero as you can sort of take, because otherwise if you have it up here, you see how it just it blocks your price action. So you want it to be nice and opaque. I have about 4%. And then what I do is I have the visibility settings so that when I draw my supply and demand zones, it shows on the current time frame I'm on and lower. Okay, so if I'm drawing a 4-hour supply or demand zone because I'm on the 4-hour chart. I only want it to show on this time frame and lower. Okay, so it shows on the hourly time frame, all the hours, all the minutes, and the seconds. I don't want it appearing on the daily chart because if you start drawing all of your lower time frame zones and then you go up to the daily chart, it's just going to look like a mess. Okay, so I personally prefer to do it that way, right? Same time frame and lower, and then you want the opacity to be really low, and then once you're happy with that, go to your template and go save as, and you can call it wherever you want. And I basically have one for each main time frame that I use pretty much. Okay. So what this essentially is doing at this moment is we've just drawn on a 4-hour range created demand. Okay, a 4-hour demand range where essentially you have the sell before the buy, right? That's where price then comes up and essentially breaks out of that range. Price then initiates out of the range. Then what do we get? We get the mitigation back into that range, back into where that demand came into the market, and then we get a continuation of that movement. Now, obviously, that's a very, very large range. So for us to trade that directly, let's just, again, there's loads of ways we can enter, but let's keep things simple, and let's always enter on the edge of the zone, just to keep it consistent for now, right? Your risk to reward is going to be terrible because you're going to enter at the top and you're going to have your stop loss here below, and then how far are you going to target? Obviously in this instance it goes quite far, but generally that's not going to be amazing trading. So what I prefer to do, especially when it's a large range like that, is we're going to refine it to the pivots within the range, right? Now from the bottom of the leg, it's pretty much just one straight movement. So the only real zone or pivot zone that we have is right at the bottom, right at the bottom of that pivot. Now if you're super, let's say mechanical, a lot of people will only draw demand zones on a bearish candle, right, like this, the sell candle, where then the next candle needs to close above it. Now, obviously, in this instance, we zoom right in. The next candle fails to close above it, right? This candle here, this should be the thrust candle. It fails to close above the previous candle's high. So for me personally, I don't view that as valid demand. I need the next candle to close above it. So this is where you can then evolve it to the next candle, okay? But then we have the same problem. You see this candle, this should be the thrust candle, right? It fails to close above the previous candle's high. So this is where I wouldn't say it's valid demand, and I would evolve it to here, right? And now we have the candle closes above it, and that's really where that true demand stepped into the market. And that would be how I would refine that whole range, okay? So we previously had the whole sell to buy range down in towards that pivot. So that's how I would draw a single candle pivot zone, okay? Strong momentum coming into the market, that's where there's demand. Okay, so we move to the upside, and then we pull back. We know now that we've basically mitigated some of the orders, right? We're not always going to pull back down to our zone, but we'll talk about this a lot more in future lessons. And then we continue to the upside. So we get that next shift, okay? Now with that shift, again, you can take the whole range. So from the top of the range to the bottom of the range, and that is your range created demand. And as we can see, price initiates out of the range. It pulls back to mitigate the range, to mitigate those remaining resting orders, to pick up more demand. And then we get the continuation of the range, right? But again, I would have been more than happy to refine that down to the single candle pivot. And this is a really nice one because it's right at the extreme of the move. The next candle just about closes above that high, so it is valid demand, okay? And then there we go. Now, what I will say, and this is where sometimes you have to read between the lines a little bit, is let's say I was looking at this in the live market and it looked basically exactly the same as this, but let's just imagine that the thrust candle didn't quite close above the high and it closed down here. Technically, that wouldn't be valid demand in that instance, okay? But it's like, well, where else am I going to draw it? Because otherwise, if I don't draw it here, am I going to take that candle and draw it all the way up here? Well, okay, you could do that, and that could be very mechanical because the next candle does close above that high. But at that point, it's massive. You're basically taking the whole range. So that's where I prefer to just read a little bit between the lines, and I would just draw it to here. And this is where basically you can go through, if you want to be super mechanical and you want to find the exact candle that the next candle closes above it, you could cycle through the time frames and you could go to say like, let me just bar replay so we don't lose where we are. But you could go to we're looking at this zone here, and you could go to the 3-hour chart. Okay, and then this is where you go, right, that's the candle that was then, the next candle closed above its high, or you could even take, both candles in that instance. But I find that to be really unnecessary. And this is why I prefer to just stick on the time frame I'm looking at. And look, if it doesn't quite close above it, but it's clearly, we've had the movement, we've come down, that's where the demand stepped in, I'm happy to draw it in that instance, okay? So, but yeah, hopefully that's not too confusing, but we'll go through it as we get there. So, yeah, and then even, right, we're moving to the upside, and we know as that's happening, what's going to be going on to the left, there's going to be supply zones as well. Now, this is another one which we can have a few questions around understandably. So this is where we have a buy, right, to sell. So you can see that price was coming down, and then we get a bullish candle. So we clearly know that on the lower time frame there was a pullback, and then price comes down, okay? So for me, that is a valid supply zone. The thing that probably some of you are maybe asking is, well, if you look at it from a structure perspective, the fractal structure, you see how all of these candles broke the previous candle's low? So if we look at it from a structure perspective, there wasn't actually a pullback there in this time frame because, from a fractal structure perspective, that's all one down move, right? And you are correct. So this is where when I see a zone like this in the market, they are valid because as you can see, they create moves, but the ones that are better, and we're going to get into this in the next lessons, are the ones that actually have kind of that true pullback, and then they lead to that break of structure, okay? But again, we'll talk about this in the future lessons. I'm getting a bit ahead of myself a little bit, but that is just something I want to point out. But, you can clearly see on a lower time frame that was that buy before the sell, and then we go where we have that bullish candle. So price comes in, fills up some of that supply. We then move to the downside. Then we fill up some of the demand in that whole range, right? And then we move to the upside. And again, there's going to be more supply zones over here. This is where we have those inside bar levels. Now, as you can see here, this zone, this inside bar wasn't completely fresh because it was created back here. So when we have this inside bar, and then when this next candle here moves to the downside and it closes below that low, this then becomes a valid supply zone. But then what happens after this candle is printed, price then pulls back into the zone, right? And it fills up some of the orders, and then we move to the downside. So for me, that means that zone has been mitigated, right? It's been partially mitigated. Price has filled up some of the orders and continued. So if I was in the market and I see price coming up, I would see this as a valid zone, but I would just be, a little bit cautious that, well, some of the orders have already been filled, okay? But as you can see, it pushes deeper into the zone, it fills up some more of the remaining orders, and we get a bit of selling pressure, but then ultimately price pushes up a little bit higher. And then what do? We mitigate the zone above, what we just missed actually. Yeah, just missed it there. But this is again where sometimes the market is not perfect, and what you'll have to recognize is that, let's say we're in the live market and price is coming up into this instance, and we go, okay, we have this pivot zone here and we have this pivot zone here. Price is now traded up through this one. So the bit I'm talking about is when price is here. We go, okay, we traded through here. We could be waiting for price to tap into here, but it doesn't quite tap in, and then we move away. We can understand, and we can look left and go, well, we know that this whole area is supply, right? This whole level here, it's range created supply, okay? Because we can see what happened. Price came down, it pulled back, and then we got that injection of supply, right? The buy to sell. So that whole area we know is valid supply. So look, it's quite large, and that's why we tried to then refine it to the pivots within it, right? We've got price coming down, the buy to sell, right? That pivot, we could take the range like that with this refined zone within. We could refine it even more to the single candle pivot, and then the other pivots from within there. But we know that the whole time, once price reaches in to this supply range, we know at any point that selling pressure could be coming in, okay? So, what I will do in the market, and again, we'll keep going over and over this in the coming lessons. If you're getting a little bit confused, don't worry, is I will have the refined pivot zones like this. I'm aware of them, but say I don't have this drawn on and price just misses it. Like, I know in the back of my mind that we're in this entire supply range. I just don't always draw it on because I know where I am. Like, I'm looking left and I can see there's a clear supply range here, and I'm expecting seller pressure to come in, okay? Sometimes you just have to read between the lines a little bit that this whole area is supply. Okay, hopefully that makes sense. And then we have a bit of choppy price action, and then we push up higher, right? So, and again, you can be looking left and drawing all of these zones, right? There's all valid supply there. It's going to want to stick to a few more obvious ones now. So let me just play price forward a little bit, and then we'll talk about some more obvious ones just to speed it up a bit. So we have that movement upright. We have that sell to buy range. So what do we know? We know that this whole area is a valid demand range, right? That whole level. As we can see, price taps into the range. But what we can do is we can refine, demand levels within there. And I know this is messy, but I promise you it would be, because this is not where we're adding our refinements in. We're literally just looking for like the ranges and the pivots from within it. So we know we have this demand range. I'm just going to delete it for a minute. Now, let's say price was, let's bring it back a bit, here, right? I mean, we're looking for demand, and potentially we're expecting that, after that demand range was created, that price would come back into here and potentially continue. So we could look for entries. Well, I already showed you how we could take the entire range, but that's quite large, right? So maybe we would want to refine it a little bit. So if we look at the apex of the move and we start from the bottom, none of these candles close above the candle's high, right? So it doesn't make sense to draw any demand from within here. Potentially you could take that level, but this is where I would then refine it to where is the next candle where the next candle actually closes above it, right? Does it do it here? No. Does it do it here? No. Does it do it here? Yes. Okay. So there's a potential level in which you could then draw or refine that whole range down to a single candle pivot. Okay. So you see how technically that is not a bearish candle, right? It's not a bearish candle. That's then the next candle closes above it. This is where you can have a bullish candle and then a bullish candle. So that's what I'm saying. I'm not 100% mechanical with that. Some people need to, or they will only draw demand on a bearish candle where then the next candle closes above it, like this one here, right? I'm not that fussy because, what you could do is you could go through time frames again, like I said, and you could look, there we go, right? There would be your bearish candle where the next candle closes above it. I'm not bothered to do that. I prefer to keep it simple, and I'm simply just looking for, where did that demand step into the market? And ideally, I want to see the next candle close above it, right? And that would be a level. Now, I'm not saying this is a good demand level on its own. Again, we're going to bring in more filters. I'm just kind of show you the basics of how I would refine ranges down to sort of single candle pivot zones, right? And there we go. We get a bit of a reaction. Okay. And then, right, move to downside. So now what do we have? You see how we have that supply, right? Movement, pivot, supply stepped into the market. So what do we have? We have the supply range from the low to the high. That's your supply range. Big's range, what can we do? We can refine it to the pivot from within it, okay? And there you go. You can refine it to the inside bar. Sometimes inside bars are a bit over refined. It's a bit small. So you could take the buy before the sell, right? Like that. That's what some people prefer to do, okay? So there is a little bit of an art to drawing supply and demand in that sense, depending on how super mechanical you want to be. Do you always want to draw it to that single candle? Like, this is the questions you want to ask yourself as you're going through the course and as you start to, find the way that you want to trade. Do you want to be the person who always uses the single candle and you want to be quite refined and you will always draw on the single candle where the next candle closes below its low if it's supply and then closes above its high if it's demand? That can keep things relatively simple. But what you have to, and that's kind of pretty much how I trade at the moment. I'm like that 95% of the time, okay? But what I do is, let's say I've refined my zone to here, and that's going to be nice. I want to look to say short from within here. I know that if price starts putting back into here, and let's say it's around here at this moment, I just know in the back of my mind without drawing it on that we're within the entire supply range. And I know at any moment we don't have to pull up here because at some point, whilst we're within this range, there could be, it could fill up enough orders where then supply does overpower demand and then we continue. So ideally, I want price to hit here, let's say, but I'm aware that let's say, I'm on the M15 looking for my entry. Ideally, I want it to hit here. But if we start to really shift, let's say on the M15 and we get like a true bearish structure shift on the M15 and then we have a nice M15 supply zone, I'm going to understand where we are, right? We're in the supply zone on the 4-hour chart, so maybe I'm keen to now get involved from within here and go because I understand that price doesn't have to hit my refined level, okay? So yeah, that's kind of basically the way I approach it. Is like I like to be refined. I want it to ideally hit, the top of that pullback where we have our refined single candle pivot zone, but I'm aware that we are within that clean supply range, okay? And that's basically how I tend to approach things the majority of the time, okay? And come into some old levels, right? We start to see some of those orders being filled, but then likewise, right, you can see there's a shift here, there's a supply zone there, they're literally everywhere. And then we chop around, we create some demand, we start to fill out that demand, and then we push through it. Sometimes you're gonna get choppy price action, this is what I mean, right? And then you've got the sell before the buy, so now you have some demand here. Let's draw this on. You see how you have this candle here. It's not great because it's, to be fair, already had a mitigation, but this is where, again, I haven't talked about fractal zones just yet. You have the wick, right? And we know there'll be, on a lower time frame, there'll be some supply from within there. Like if we go and investigate, let's maybe look at, say, the 15-minute, what was in that 4-hour wick. There's going to be some M15 supply zones from within there. It's not the cleanest because they're all kind of mitigated. But essentially that's what you're doing is you're reading the lower time frames on the higher time frames, okay, where you can refine it to unmitigated wick, but there's not going to be as many orders from within there as a full unmitigated candle like we have here, right? Because when we had the full bodied candle here, just bring it back on bar replay so I can show you what I mean. That's when that zone is created, right? We had the buy before the sell, the candle closes below it. So we have valid supply. What happens next? Price moves into the zone and it fills up some of those orders, a lot of the orders actually, because it's traded pretty much into almost the EQ of that zone and it moves down. So for me, like when I see a zone like that, I pretty much count that zone as done. That zone is done, right? Like the majority of the orders have been filled. So if price was to return to that area, I'm not really going to be expecting like a massive move away because it's already, like I said, its power has been absorbed, the supply has been absorbed, right? So when we come back to here and then price moves up, right? And then let's say we get a bit of a a pullback like that, I'll look left and go, what are we reacting to? Well, this zone, it was pretty much mitigated, but I understand that there's still some orders from within here, and we've moved it back. But I'm not expecting, on average, that when it's just mitigating a wick, when the edge, when this had already been filled, I'm not expecting that to be a big move. There's just going to be a small amount of orders to potentially generate a bit of a pullback. Now, when you've got a big, full-bodied, what I call an unmitigated zone here, like a completely fresh zone that hasn't been tapped into, what do you think is going to have more power? Just this wick, how many orders are going to be in there compared to how many orders are going to be in here when price first taps into it? On the balance of probabilities, ignoring all other confluence, right, ignoring market structure, blah, 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 a full, single candle, unmitigated, fresh zone, whatever you want to call it, to me, is going to have a lot more power to then move to the upside rather than just trying to trade against that wick, right? Hopefully that makes sense. So when price is coming into here, that gives us an edge, right? We can expect that's more likely to overpower, demand to the upside. So we're going to talk about this in a lot more depth as we go, but that's essentially what I'm doing, right? Again, we're up here. I could be waiting for price to come up into this refined zone, but I'm aware, where are we? We're within that whole level there. And that's the first time we've tapped into this range now, and we're starting to see that movement to the downside. But where are we coming into? We're coming into this level here. You see, that's the demand. And this is why it can get really messy, because you have this whole sell to buy range, right? Following on. So I'll just draw it on for you. All right, we come up, we pull back into that demand level here, right? This demand range, that single candle, pivot zone. We then pivot to the upside. So from the top of the pullback to the bottom of the pullback, that's your range created demand. Within that, we can refine it just on this time frame, okay? And that's your demand zone. All right, and I'll kind of show you why, just in case someone might be running. You could start from the bottom, if that helps, right? Start from the apex, but you see, that's already been mitigated, right? Price had pushed out, it came back in, filled the orders, and continued, right? So again, this is all, the next candle above here doesn't close above it. You move it to that one, all right? The thrust candle closes above it. It's completely unmitigated. So that's what I would call the unmitigated extreme pivot zone, right? So it's the extreme of this pullback to the upside. It's completely unmitigated. So you see, once it was created here, where the next candle closes above it, since it's been created, nothing has tapped into it until we're coming back here. So that's why, if you ever hear me say the unmitigated extreme, this is what I'm talking about. Because if this whole demand range here is going to continue, this is like the level in which it's most likely going to continue from, okay? Now, sometimes what will happen is, and you'll see this, is price will trade a little bit lower, and then it might fill up, it might tap into something within this wick. It never violates the demand range, and then we get that movement, okay? That can happen, right? Essentially, we get sweeps liquidity and blah, blah, blah. We'll talk about this later, but just for you to know that. So, and if that does happen, I don't panic. Like if price comes down and we push a little bit lower, if I get my lower time frame confirmations, again, say on the M15, we get that shift in structure, we get a fresh demands on the M15. I still understand that this low is held, we're still within demand range. Okay, cool, let's trade higher, okay? But, it's nice and clean, and ideally when this single candle pivot zone holds itself, and there we go, I don't know, let's see. We create another zone here, but it gets a bit messy. And then, okay, in this instance, we actually sweep this low, and then we push up, and then we get another pivot. All right, and here we go. So I don't want to drag this lesson on, too much longer. But I kind of just wanted to do some basic drawing. But you see, when it's like this is all a bit of a mess, and it's all a bit like. But you can understand this is where the pivots are. That's where there's supply. Here's a sell to buy pivot, so we know there's demand from within here. But then you get pivots within pivots, and it all gets very confusing. And that's why we start with market structure, because you need that skeleton. You need that solid bone framework for us to lay out first and map. And then we overlay these zones within that, because otherwise this is what happens, and it can get very, very messy and very, very confusing, understandably, quite quickly. Now, what I did want to talk about actually, which I haven't, is a bit just quickly to point out some fractal zones. So let me just delete this before we kind of go on to the next stuff, and then let me just quickly look for some nice examples of, let's look for some wick zones. Okay, here's one. So when we come back here, right, price is moving to the downside. Now, if we look at these, see how all of these break the previous candle's low until here, and then we get that fractal pullback, okay? So what do you think is happening? If you think about how those candles are formed, what do you think is happening on a lower time frame? So we have a down movement, and on a lower time frame, what would you see now? You would see a bit of a pullback, right? Then you would see a down movement, and then you would see a break to the upside on a lower time frame, and then you would see a down movement, right? Pullback, down movement, pullback, down movement, up movement, up movement, down movement. That's essentially what you're seeing, okay? So the point I'm going to point out is when you see sort of big buy to sell wicks on the down movements, you get something like that, and then you can see that sharp movement to the upside, and then the down movement, all right? What is that going to be if I just drag this across? That hasn't done it very well. Essentially what that's going to be in the lower time frame, if you take from the buy to sell wicks, we've gone through this in theory lesson, that's going to be your supply, right? So if I look down on the lower time frame, hopefully this works, you can see that now. So that was just buy to sell wicks on the 4-hour chart, but what is it? It's a supply range on the M15, okay? So without even looking at the lower time frame, that's how you can read that there may be a supply range or a pivot supply on the lower time frame, and that's when price taps into it and then continues to the downside, okay? And obviously you could refine that to the wick as well. But yeah, that's pretty much fractal zones in a nutshell. But what I want to do now is in the next lessons, we're going to start to show you the two main filters that we use to filter them, right? To try and look for more high probability zones. But as we go throughout the course and we add more and more confluence, you will, we do our best to try and spot which ones are likely to hold the most volume within them and cause that next high probable move. So yeah,